Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the gold prices have notched another all-time high this week, both globally and in India. In the past year alone, the prices have surged by nearly 20%. A weak US dollar and expectation of interest rate cuts are among the factors that are spurring the rise. A demand for the safe haven asset is also supporting silver prices, which are near 7-month highs. To discuss the outlook on gold prices, I am now joined by Philip Newman. He's Managing Director at Metal Focus. Philip, thank you so much for joining us. What's your sense really on the kind of price moves that we've seen? I mean, it has been very volatile. We've seen $50 to $100 of a move coming in quite easy.
Absolutely, and well, thank you for having me on your show again. So I think what we saw last week was I think quite thin trading conditions, driving prices, of course, to new highs, and I think that's been reflected in how quickly the price has come down over the past day or so, although of course, still holding above the $2,000 level.
So, Philip, what's your sense on where the buying is coming in from in sense of gold? I mean, we do understand that the ETFs were short. The funds have just about started to buy again. Are you looking at more interest going forward at these current levels from them?
I think there will be perhaps some concern about how high the price is. But I think when we think about the reasons why it did, shoot up and has remained strong for some time now, is that there are considerable expectations among a range of different institutional investors that the Fed will pivot, that the Fed will quickly change course early next year, and will start lowering rates much more quickly than the Fed has said it will do so. And I think while you see quite a separation between what the market expects the Fed to do and what the Fed says, that will continue to attract investors even at these levels.
Philip, do you also belong to the a group which expects that we could be looking at higher highs in case of gold in next year? I mean, on a conservative level, people are talking about 2050, and then there are reports about 2400, even 2500 for that matter. Do you see that much bullishness in the 2024?
I'm afraid not. In terms of our base case, we feel that you're going to see echoes of part of this year when the market, in our view, will gradually move towards the Fed position. At this point in time, we see no reason why the Fed will alter its course of really remaining hawkish for much of 2024. And so we don't think that rates will be cut until very late next year. And so under that scenario, as the market moves towards the Fed's position, we think, in fact, you're going to see liquidations by investors, and then that will gradually weigh on the price. And so we think that it will gradually weaken and actually head towards the 1900 back down there, and then head back towards the $1,800 level as we move through 24.
All right, so it promises to be quite uncertain going forward from here. The one thing that has been supportive, Philip, has been the global central bank buying. How are you reading into that?
Very much so. I mean, I think you hit the nail on the head. I mean, last year was a record high on a net basis around the 1080-ton level. And already on a net basis, over the first 3 quarters of this year, we've already hit 800 tons. And that's really quite impressive because the early part of this year, the first 3 or 4, even 5 months, there was quite considerable selling by some central banks, a very small number for very specific reasons. But the fact on a net basis, we hit 800 tons, I think is quite impressive. So it's quite possible that for, when we actually early next year and we look at Q4, we could be looking at another record high for 2023 on a calendar year basis, which is quite remarkable on where we saw the figures last year.
With the kind of volatile moves that we are seeing, Philip, do you see that impacting physical buying, especially from India and China?
I think absolutely. I think the one thing that jewelry consumers don't want is price volatility. We'd already seen Indian consumers approaching the festive and wedding season, I think in quite bullish mood. We saw that amongst the trade as well. But I think at these levels, I think there's going to be considerable concern. I think, if prices were even to settle in dollar terms, let's just pick a figure. Say they were to settle around $2,000. Yes, that's exceptionally high. But if they have that price stability, then that can encourage consumers to come back to the market. But if you've got prices remaining really volatile, then that can really undermine demand. And I think that will be a concern, given, of course, the important time of the year that we're in, especially in India.
Oh, well, absolutely. There has been a big volatility in the prices here. But thank you so much, Philip, for joining us and making sense of what's moving in case of gold prices. As you said, the global central banks is something that we'll need to watch out for, but the prices perhaps may not sustain at all-time highs going forward in 2024. Thank you so much for joining us at CNBC TV18. Let's shift focus from gold to other precious metal, which is silver. And joining me now to talk about that is Michael DiRienzo. He is Executive Director at the Silver Institute. Michael, hi, thank you so much for joining us. And silver is yet another metal which has seen strong gains in last 1 year. What's your sense on where is this all demand coming in from?
Well, the demand is really coming on the industrial side. We put out a report just this last month on the 15th talking about how we saw the market basis our April launch of the World Silver Survey. And, we're happy to report that we think there's going to be another record demand for industrial silver this year, taking it up to about 632 million ounces. And the key drivers obviously are very strong investment in photovoltaics, power grid, and 5G network investments, as well as growth in consumer electronics, and of course, rising vehicle output with respect to electric and hybrid vehicles.
Michael, last year was a good deficit in case of silver, and this year as well, you have been advocating or projecting one. What is it that the street rally seems to be thriving on in sense of investments? Are you looking at a big number there in sense of deficit?
Yeah, we had, I think it was like 92 in 2021, over 250 million ounces in 2022. And this year we're calling for another significant deficit of about 140 million ounces. It's a little bit lower, obviously, than 2022's all-time high, but it's still elevated by historical standards. And our consultants at Metals Focus firmly believe that this is going to continue for the foreseeable future.
So in that sense, Michael, how would you look at the prices going forward? I mean, we've seen a good 25% increase in the Indian markets for silver in the last year. What is it that the range that you're looking going forward?
Well, we think the average silver price is going to increase by some 6 to 8% this year, on average, to be about 23.10. But these last few weeks have been quite extraordinary for the precious metals complex with respect to gold and silver. I mean, we're looking at about $25 silver as we speak this morning. And like I mentioned, they've grown about 8% year on year. And we are firmly in the camp that this is going to continue into 2024. And we're very not only optimistic, but we're also very happy about the strong fundamentals of the market and where that's going to take us with respect to the silver price next year. But we're happy we had an increase this year, and we're looking forward to a very, very strong 2024.
All right. And how would you look at various factors and fundamentals impacting silver? I know gold-silver ratio is one way to look at it, but the safe haven buying that the gold has seen also has supported silver. The base metal prices have begun to pick up as well, and there's anticipation that the interest rate cuts in the next year could also be supportive. What are the fundamentals that you think are more important?
Well, you pretty much hit the nail on the head. Look, we think that the U.S. Federal Reserve, for example, has not only paused interest rate increases for the remainder of this year, but will start in early 2024 to even cut or lower these really, really high interest rates. So we think that's going to be a boon for silver down the road. We look at the dollar, it's starting to lose some of its impact overseas. It's starting to lose a lot of its impact here. And, while inflation has been tamed to a certain degree, I think the average consumer in the United States is still feeling a pinch when it comes to the basics, energy bills, food, gas, and whatever, home prices and so forth, are really going to lead in favor to all precious metals and silver, of course. So again, we're very optimistic about that going forward.
All right, so more optimism in case of silver rather than gold, and an 8% on an average return is what silver could give you in the years to come. Michael, thank you as always for joining us here at CNBC TV18 and giving a sense on where silver prices could be headed in 2024. On that note, it's time for a break, but don't go anywhere. We speak to Ole Hansen of Saxo Bank on metals, crude, and of course, agri-commodities.